Hello and welcome. An ideal time to look back at what will certainly go down in history as an unforgettable year. Memorable for the pandemic and the tragic loss of so many lives, but also for the impact on financial markets, economies, and the drastic changes in our day-to-day living, as I'm sure you can also attest to. You will recall that we entered 2020 in a low real return environment, quickly exacerbated by the record sell-off we saw in March. A sell-off the likes of which were only rivaled by the Great Depression of the 1930s. We then saw an equally impressive V-shaped recovery in equity markets during Q2. This was fueled by the unprecedented amount and speed of the fiscal response. However, this recovery was not broad-based, but rather concentrated in only a few sectors and stocks. Markets paused briefly in Q3 as the uneven recovery became evident and second waves of infection started breaking out across most of the developed world, in particular Europe. Finally, in Q4, markets again reacted positively to the preliminary US election outcome, the possibility of yet a further fiscal stimulus package being approved, as well as news of positive vaccine trials from both Moderna and Pfizer. This then saw emerging markets, who were already trading at deep discounts to their developed market counterparts, come out as the clear winners. Locally, markets also rallied, with the JSE Caps Swiss returning 11.5%, while the South African listed property sector delivered an impressive 22.2%. I'm also pleased to report that our focus and target fund of fund ranges have participated handsomely in the recovery post-March, posting back-to-back consecutive first and second quartile peer relative returns, essentially relegating the drawdowns of the COVID-induced sell-off, and further confirming a key pillar of our OBI philosophy, that to remain invested is the optimal long-term strategy. Looking ahead then at 2021, we expect growth assets could be more accommodating in the near term, based on the low interest rates as well as further positive news flows. We do expect a continued rotation out of the so-called pandemic winners into oversold mid and small cap value stocks. However, volatility could persist in light of the geopolitical and fiscal risks, as well as further job losses. Some risks also remain around the logistics of the vaccine rollouts and potential new waves and strains. As always, our funds remain purposefully diversified and positioned for the prevailing market conditions. That's all from me, and thank you for listening.